Okay, welcome everyone. We'll start our lesson one. Today lesson will go through LO1, learning outcome one, which is about understand the relationship between cost accounting and management accounting. So we'll discuss cost accounting and management accounting, what is the key difference, and we'll go through two assessment criteria which we have under this learning outcome. So first of all, before starting this unit, I'll go through the aim of this unit, why really we want to learn this, and how many learning outcome we have. Okay, now we'll see this window. As we have unit aims. This unit is explore how the financial information enables administrative managers to plan, control, and make the effective decision. So decision making means the selecting the best course of action. So learner who aspire to be managerial position in the businesses will develop the fundamental financial and accounting knowledge and understanding the skill and underpinning such job roles. So that's the key purpose of this unit to learn. Okay, so we have three learning outcome. Understand the relationship between the cost accounting, management accounting, explain the purpose and the scope of cost and management accounting, and analysis the information provided in the cost accounting system and how this can help to make the decision. Then the second lesson will go through the budget and budgetary control and techniques, and the lesson 3 will go through understand the structure and the purpose of the company accounts, and how many types of financial statement we prepare in account. So that's the key we need to learn in these three learning outcomes. So today each lesson we'll go through one learning outcome. Okay, so today we'll discuss learning outcome one. Okay, so let's please count your knowledge about accounting, financial accounting and management accounting, scale 1 to 10. How you can rate yourself, please. Always good to be when we'll start any activity, reflect, grant your knowledge, and at the end of the lesson, always reflect as well. What do you think? Scale 1 to 10, please.
I'm not confident at all. I need to know everything about accounting.
Okay, it means we can say you're at the 1 or 2 at the moment.
Yes.
Okay. So we have these two assessment criteria which I have mentioned. Okay, what is the key difference? First of all, the data used to prepare the management accounts. Management accounts always internal. As the word management, do we know what is meant by management? Why we need management? Have we learned anything about management? What is the management in your own words?
A group of people who plan and control and make decisions.
Plan, control, well done. What else?
And make decisions for the organization.
And make decisions. Okay, for organization. Good. Okay, so management we call, if you're a manager, management is a process of designing an environment to achieve pre-selected objective. Management is a process of designing an environment to achieve the pre-selected objective. So objective, what are objective? Objective mean end result. Yes, what really end of activities we want to achieve. So we can plan for it, we can control for it. Control mean the corrective action. We find the best options. We find best options. So we have a various option, like you have an option to do this course and you have an option to do other course. But you found this option is the best for you and you want to achieve your objective, whatever your objective, you want further qualification or any other immigration objective, that's your objective. Okay, so the difference between management, which is the internal, and financial accounting, we need to remember is external. external. External user use the information. External user, they are available, like company's financial statements. Company's financial statements. Do we remember how many types of statements we prepare in accounts? Are we heard about or not?
No.
Okay, no problem. We'll go through. Okay, in financial accounting, we prepare 4 types of statements. 4 types of statement. So first statements. Okay, first we say statement of profit and loss. Statement of profit and loss, where we can see the company on the profit or loss. Yes, how much sales we have, how much expenses we have. Second statement is a statement of balance sheet. It's also known as financial position. If you want to see the company's financial position, it will show assets, shows liabilities, and capital. How much asset they own, like building, plant, machinery, and how much worth of. So that's that's the crucial, the things we have. The third statement is called statement of cash flow. We can see inflow, how much money in, and how much money outflow. That's and the fourth statement is statement of change in equity. Equity means shares, or we call shareholder statement. Shareholder can see how much dividend we are going to pay, how much we paid, how much profit we have a year, how much revaluation or asset value went up and down. So that's all shows. So these are 4 statements. We okay? Yeah. So we can find online any company like Unilever, Procter & Gamble, whatever company or any company local. Then normally we have a financial statement available on their website. Okay, so management accounting distribute internally for the use of the business. So internal information for internal user, like employees, like management, like director. Management decide the way they present, help management planning, controlling, and decision making. So management accounts is all about planning, control, and decision making. Look at the past data. So management is the past data, and they forecast for the future what we have to do based on the trend, based on the analysis, like what is inflation rate we have. So where the money will come from, where the money will go. Yes, all we need to be planned. Not legally required to prepare them. It's by law that we don't need to be prepared management account, but we prepare for the better, because if you're preparing the reports like marketing reports, like any other reports, that's our purpose to be controlled, like our budget is also part of management accounts. Include both financial and non-financial. So in management account, include both financial information and non-financial. Financial is create the numbers, and non-financial, good, bad, is excellent, is a variance, and all these. Okay. Then we have a financial account is use external reporting, which we said prepare 4 type of statement for external user. It's a by law we have to prepare for the companies. It's look the past data. It's not give the information, but not future data, but we look the past data, what we done, in which area we went well, in which area we not went well. So usually we include the financial information only and detailed result. Any question? Yes or no, please? Any question? Hello, can you hear me? Any question? Yes, Selma, any question?
Thank you. I understand everything. Actually, it got muted, and it takes a bit of time to unmute it.
No problem. That's absolutely fine. Okay, brilliant. That's absolutely fine. Okay, then management accounting information mainly produce for internal use, purpose of information to add planning, legal requirement, no legal requirement, format, we can decide what is useful for the company and for our, and nature of the information, it can be financial. So all this, further is being summarized in this slide as well. Huh? Any question if you have, you can ask. Next, we're looking in this slide is all been explained in the words as well. Management accounting is a key element of management and particularly involve the identification, generation, presentation, interpretation, and the use of relevant information will help managers to make decisions. So management is all about, management is a task, management is a discipline. So for how we can use our finances and we can create, because according to one of the great scholars, Neil Robin, he said about we have unlimited want. As a human being, we have unlimited wants, but we have a limited resources. So as a management, as a manager, how we use the limited resources effectively, we need to prioritize them. Yeah, which activity, which activity is more urgent and which activity is less urgent. Huh? So we allocate our own even individual budgets as well. So stakeholders mean anybody who has any interest in the business. So always management try to meet their expectation. Then we have a cost accounting. So what is a cost accounting? Is the system we record the data and produce the information, the costing. Like when we manufacturing one product, how much is cost me material, how much cost me labor, why we set up a factory in Pakistan, is it the labor is cheaper or the raw material is available frequently or is it port nearby? So we need to calculate the cost. The cost accounting involves careful evaluation and the resources used within the enterprise, and the technique implied is the cost accounting designed to provide the financial information about the financial performance. That's all we need to go through. The term cost and are used mean the same thing, but strictly speaking, cost accounting is a one element of management accounting. Huh? Management is also include the planning, controlling. Okay, that's all about it.
And what do you mean by stakeholders? The people who put in money for the business, the financials, that's what you mean by stakeholders?
Okay, the stakeholders not meant by shareholders. Shareholder mean investors. Like you are the stakeholder in the UK university because you're a user of. If we make any decision, your interest can be influenced or you will be affected by the decision of the UK university. Yes?
Right.
So you are the stakeholders, like investor money and getting return out of in term of dividend. That's called shareholders.
Okay. Thank you.
Okay. Welcome. Okay, next we have a cost accounting to help about purposes of planning, controlling, and decision making. A key, however, is what exactly meant by the unit of the output. What is the cost of one unit? What is the cost of multi-units? What is the cost of if you buy 10 kg or 1 kg? Yes. So all we looking the costing side. So car manufacturing want to determine the cost of each car and probably determine the components of as well. So in printing firm, the cost one unit could be specific customer order. In the pen manufacturing cost, the unit could be liter of pen, how much cost are in accounting firm to know the cost incurred each client, help with the common calculate the cost per hour and charge the time we spend on someone or provide the services to your client or our clients. Huh? The hospitality industry, which is travel and tourism, which is service industries, or is a hospital, the cost per patient treat, the cost providing the one bed each day, the cost of operation. So that's all about the cost accounting. Huh? And the cost. The cost can be different element of cost. It can be material, labor, and expense. So we can say how much is worth of material one unit, how much worth of labor, or we have overhead expenses that not directly involved but indirectly still expense. Like end of the year we have to pay fees to accountant prepare our accounts. So that can be okay. Then we looking the prime cost. Prime cost is known as a direct cost. We use the terminology is called prime cost. Indirect cost, not directly involved, but indirectly is a cost. The cost which we can't trace within a product. Like if you have a mobile phone, we can trace it how much mobile phone is cost us to manufacture. But the cost which is not included in the mobile phone, like they have paying for advertising, that cost will be indirect cost. Okay, then next we're looking at the cost card. How we can calculate the cost of one unit. Cost of individual unit is shown as the unit cost card. Direct material labor, direct expense is equal to prime cost. Then we add the overheads, those not directly. Then we have it's become a production cost. Then we have some non-production cost like selling, distribution, admin, finance. So we can say what is the total cost of unit, and then we can say how much profit you want to mark up, or we call margin top of it. Yes, that's all about. Any question?
Yes, about what's the difference between a direct and indirect? Can you please repeat that again?
The cost directly, which is a traceable within a product. So if you have a product in your hand, you can trace, oh, it will be the water is how much worth, the bottle cost is how much is, the packing is how much is, that is it's a traceable. If you want to trace it, how much actually the cost to the company, you can trace it.
Mm-hmm.
The indirect you can't find within a product. Yes, this is like outside, but still is a cost. Like you spending money on advertising. Yes, you paid distribution cost, but that not being included in the product.
Okay.
Like if you want to see clothes, yes, you're making a clothing, so you can see how much your time you spend it. If you say, let's say 1,000 rupees an hour, so that's your 1,000 rupees that cost you as a labor. What cost you as a cloth to bring it, yes, and then maybe stitching and all of that, those are all the direct costs, and you can say, oh, this cost me this set of, yes.
Okay. So all the extra factors are involved in indirect costs.
Yeah, those not directly involved, but indirectly still you have to pay, or you paid.
Okay. Right. Thank you.
Okay, then we have a cost card. Cost card mean how we can, because the different method of costing we can use it. One is called batch cost. You making things in batches, 1,000, 2,000 unit each batch. So that's a batch costing. So you can say my one batch cost me 50,000 rupees. Yes. Absorption costing means, if I'll give you example, like we living in a, sorry, we living in a accommodation where we have a shared accommodation. Yes. So when we have a shared accommodation, let's say if you're living in a small room and someone living in a big room, and everyone household says pay equal rent. Is it right to pay equal rent? Is it, let's say one room is a small room, other rooms are big, and everyone say will pay equally rent. Yes, house on rent. So this is not a, we need to find that criteria. We can say, how much is cost you and how much is cost others. So we can say how many square foot area you occupied and how many square foot area other occupied. So we can say total cost divided by area and times by total area which you occupied. So we can observe the cost according to the area. Does it make sense?
Right.
This is called absorption costing.
Okay.
So job costing, then we have how much is a job. Like if you're a builder and you have a job, maybe you have working on this plot to make a house, you working other plot, that's a job costing. Okay, then we have a marginal costing. Marginal cost mean all variable cost. When you include the variable cost into any unit, it's called marginal cost. We use term. Then we have a process costing, like different processes. Maybe you have a if we're making medicine, there is a, maybe there is a material department, there is a processing department, all the processes come together and make one product. So each process or each stage of the making product, we can calculate the cost. We can say why here is costing more. Like we have a computer IT technician cost, so maybe we can outsource it. Like many outsourcing or the IT centers in Pakistan, especially in Karachi. Yes. So that's the process costing. Each process we can calculate separate cost. Any question?
Yes. Can you please repeat absorption cost again?
Absorption costing means absorbed into the main product. Like, it costs us £10 to manufacture, but it costs us £1,000 to advertise. So that £1,000 we advertise, and how many product we sold it, so we can absorb it into each product, and then we can say, oh, my advertising cost is in part of included into product, and we can say this product I should charge this price. Like if you work for your own business, you need to be you absorb your own salary into, because if you work for someone else, you should get the salary. Yes, if you're making your own product, you can say my labor cost is it should be absorbed into the product. Different basis we observe.
You divide all the amounts of that product, and that's what you call it.
We include into the product, direct, indirect, fixed, variable, all costs. We include it, and then we decide what will be per unit cost.
Okay, thank you.
Welcome. Then we have a cost. We can divide cost by function. Like production cost, production department is a one function of in our organization. So each department cost is a functional cost. Like production cost, administration cost, we have a selling and distribution department cost. Then we have a finance cost. That we add all the costs that make organization cost. So these are called, department is called the function. So if every function is work effectively, then its organization will be more productive. Okay, then we have as we mentioned previously, direct cost is identifiable. These are all direct costs. Direct costs also known as a prime. Indirect cost, which is indirectly involved, and when we add them together, it makes product cost. Okay, then we have next direct, indirect, and we can allocate the cost. Some basis we can allocate, like I said, small room and big room if we have overhead cost. Okay, then we have a basic cost behavior, which we'll go through the next slide. Variable cost, the cost which change for the output, like electricity cost. Each unit is a cost, yes, so that's the variable cost. House rent is a fixed cost. Doesn't matter you stay 1% or you stay 5% in a house, that's a fixed cost. Your rent is a fixed. Then semi-variable. Semi-variable means fixed and variable together. Like especially landline phone in our houses, we paying line rental, and then we make the calls, we paying the call charges as well. So this is called semi-variable, where the fixed and variable together. Any questions? And then is a step. Step cost is linked with the capacity. Like first 10,000 unit if we'll produce, we have to pay for suppose £1,000, and next we'll make 12,000. We'll need to hire one more machine or one more room or one more factory to produce. So that's the step. Is every 10 will be 1,000. So it doesn't matter if you go on 12,000 production. So it means 2,000. 10,000 will be more cost. 1,000 will be. That's the step. Like a ladder, we have a steps. Okay. It still is a fix, but it can go up. It fix not mean forever fix.
It can keep increasing.
It can increase it, but it's increased as a fixed percentage or fixed amount.
Okay.
Okay. So like here we see the line. This is the fixed cost. This is the step cost, and this is called variable cost, and this is semi-variable. So these are the graphs we can show if we need to, especially we use in economics, but it's good to be at least we have a basic concept. Okay, cost, when we have a semi-variable cost, yes, where fixed and variable together, and we want to know how much is the fixed, how much variable, then we can use one method is called high and low method. What is called? High and low. Okay, I'll give you an example next slide, that will be clear there. Okay, if we read here, we have a high level of production activity, 10,000 unit we produce, it cost us 4,000, yes, and if we produce 2,000 unit, it cost us 1,600. So I want to look now in this my total cost 4,000. How much is a fixed element? How much is a variable? And I want to look around. So what we do, always you need two levels first. And if you look the difference between the unit, how much? 10,000 minus 2,000? 8,000, yes? Between high and low unit difference, 8,000. And how high and low unit cost difference, 4,000 minus 1,600, 2,400, yes? So 2,400 divided by 8,000 is 0.3 is the cost per unit. This will be the variable cost per unit. So how many units we have a high level? 10,000 times 0.3. So it means, yes, 10,000.3. So it means 3,000 is our variable cost and remaining 1,000 is our fixed cost. So what is meant by fixed? Which fixed means stay the same within the capacity level. So if we look next level 2,000, so if you do 2,000 times 0.3, so that will come how much? 600. So 1,600 minus 600, so 1,000 will be 1,000. Okay. Sorry. Acha, half an hour mein I'm teaching. Sorry about that. Let's please. We need to be make sure that we have the fixed cost. Did we get the concept? Hello. Are we okay? Yes. High low method.
I don't understand. What do you mean by high output and low output?
So it means high number of unit and low number of unit. Output mean the unit of production, sir.
Okay. Production.
Okay, thank you. Okay, that's we discussed. Then we have a period cost. We can say for a month. That's the period. Product cost is what we make it. That's called product cost. Absorption costing is we discuss the cost which we can absorb into the certain product. Yes, that will be the absorption costing. Okay, just one. Okay, sorry. Let's next we have absorption costing. As earlier like explained you, each costing method have own advantages and disadvantages. Okay, so then we have overhead. Overhead mean like indirect costs. But if you want to allocate it, you have to allocate some basis. Okay, so it's called, which we'll go through some basis now. One is called direct apportionment and one is called step apportionment. Really, that's a very advanced level we are going, but it's good to know. So we have some absorption overhead rate. We always say what is my budget and what is my activity. So it tell me what is my 1 unit cost. Budgeted overhead cost means that indirect cost divided by activity. So how many hours, how many units you produce. So we can find the rate and then we can times by the actual unit we produce it. Yes, and we can find the variance. Any question on this?
No.
Okay. Okay, then we have activity-based costing, as we mentioned earlier. Activity-based is mean like if you delivery your courier company, if you send one time delivery, how much cost you? If you do 100 delivery, how much cost you? So we have a cost driver. So each delivery we have a cost. So we'll need to be plan the route and we'll say go in this route once time so we can reduce the cost. This is called activity. If you reduce your activity, it will reduce your cost. Yes, if many times you're going to buy something, it costs you each time more. If you go once and you buy it, it costs you less. That is all about activity cost, or we call activity based costing. Huh? Any questions?
No, thank you.
Okay, as mentioned earlier, job costing is each job. As a builder, batch is how many batches you make. Service costing is the service industry like hospitality, tourism, how much is cost to provide the service to the client. We can calculate in the cost per service, like 1 hour cost to be accountant, 1 hour cost the nurses, 1 hour cost the waitress. Yes, our education as a full-time student, part-time student, how many hours. So we can calculate based on the cost. Okay, as mentioned, marginal cost. Marginal cost is known as all the variable costs. Earlier we said. So margin is mean every additional unit, how much is the addition happen. That's the margin. So when we use the term, it's called contribution. If you know the sale price, how much you will sell, and if you know how much it costs you as a variable cost, if you take the difference between the selling price and the cost, how much as a variable cost, all the variable, and we get the contribution. Yes, contribution is marginal cost with selling price minus variable cost, and marginal cost mean variable cost. Okay, we can prepare the absorption costing and we can prepare our accounts under the marginal costing. So under the marginal costing, normally the closing inventory value is less because here fixed and it's only variable cost, and under the absorption costing we do all fixed and variable costs together. We absorb into the product, direct, indirect, all. So there will be a profit difference. That's all, discussion. Any question?
No.
Okay, then we have a cost center. Cost center, like, to whom we do the reporting and we bear the cost. Like we have an investment center where we do investment and the cost. We have a cost center where we calculate all the costs. Profit center is mean the sale minus cost. We can find how much is the profit, and investment where we calculate the return on investment. So these, the way we can calculate the return on our investment. Okay, then again, the choices, you can choose either marginal costing, you calculate all the variable cost and then you minus as a fixed period cost, which is called periodic cost, like the fixed cost, or you can each unit fixed cost you divide into the units. Each unit how much is a fixed, like in a house, if you 5 people living, we can say okay, each person rent is how much, and we can observe all the variable what you consume, gas, electric, or any other cooking, foods, whatever expense, and plus your rent, and we can say how much is cost you a month. Thus we can observe into the each individual. Yes, different basis. That's absorption cost. Okay, then we have a variable, and both have advantages and disadvantages, and the choices, it's up to you. You want to record periodically, it's based on the organization needs and objectives. We want more present and we want more control. We want to reduce fraud. So cost control is a very crucial. Not happen, that's unfortunate. In developing country we have a problem because we don't have a proper accounting and the people do in between, yes, stealing things. So if we have a costing proper, we can know where we spend it, how much spend it, where the money come, where the money go. That's all the purpose. Creating more transparencies in our organization, increase the productivity, reducing the cost, increasing the profit. That's the key message. Okay, then I copy the link for you if you want to read further. So what you can do, you can copy and paste this link, and please you can read it before next lesson, and the next lesson will go through LO2. So today we discuss about difference between marginal and we discussed management accounting and financial accounting, and we discussed management accounting is mean internal cost accounting is a part of management accounting, and financial accounting is external. Then we discussed different types of costing methods and how we can prepare it. Yes, really, because all we need to discuss the methods. And we have a books and articles, everything is available on Moodle, so please you can access. And if you have any question, feel free, guys, just drop me email, and you know my email address as well. That's all today lesson. Thanks for listening and attending, and I hope speak you during our next lesson. Please go through slides. Any question if you have, you can either drop me email or you can ask during our next lesson. Thank you. Bye bye.